Very much, Roger, for and the rest of the society for having me today and talking about ATMs. The aim or what how I've if this works. Yes. Okay. So the aim is to talk a little bit about this book, and the idea behind the research is to look at how the application of computer technology changed the workings of retail financial institutions, and in order to do that, the ATM and the development of the ATM as a system is the backbone of this story. So I'm gonna split the chat into two main blocks. One of them is trying to introduce the book and why ATMs were an interesting subject of study, and what the book in itself tries to highlight and to do. And then in the second part, which is going to be most of the discussion, I'm trying to highlight some of the issues or insights from this story to the broader history of computing. Um, among I don't know if I'm gonna be able to go into all of them in depth, particularly one that I've left on purpose for the discussion, if you so want to pick it up, which is this discussion or this um, debate between uh, when online is not really online. Um, and perhaps the introduction of non-stop computing, uh, but certainly, we'll mention some issues about the development of personal identification number, encryption, especially shared networks and operating systems, as well as trends in branch employment. So, what you will see is that my take on this story is primarily from a business perspective. So rather than going into all of the technical details as to how this was coming about, although there is elements of that within the book, the main emphasis is what were the business implications and what were businesses, in this case, retail financial institutions, trying to achieve in developing and in adopting these solutions, and what was it that was driving this technological change, and what were to some extent the challenges of this. um, so why ATMs? um, ATMs, or there is a very large number of, of literature, particularly from cross-sectional quantitative studies, and coming out from an economics perspective, and certainly within central banks, looking at ATMs as an index of technological change in retail financial institutions. Why? Because, as we will discuss in a moment, there is this materiality to ATMs as element of technological change in financial services, from all the way until today. And when we have been looking, or one of the things that we have been documented with colleagues, is this process of adoption of computer technology in retail, in commercial banks, in retail banks. And there is quite a bit of public fuss when the first mainframe computers are adopted. But from that point on, different waves of innovation kind of are subsumed into the entrails of the organization, whereas ATMs are physically and conceptually in the margins of of the um, of the organization. Yes. So within that, there is this discussion that has been permeating in for a long time, which is, to what extent does new technology displace workers? And in this case, there is a debate about whether ATMs were going to be introduced to displace blank staff. So that was one of the things that was leading this research. Secondly, and more importantly, as I've explained a moment ago, what were the corporate objectives of introducing this new technology as opposed to other potential solutions? Um, and thirdly, what were the elements that determined global adoption and depletion as the peak of adoption seems to have already taken place, and we can discuss a little bit of that when we see the graphs. So um, the book then is looking at this idea of a window of internal and external change. So it's trying to balance changes that are happening in different groups that are involved in the development of this technology: engineers, bankers, customers, and to a lesser extent, regulators. Yes, but even within those, there are different groups of engineers. Um, and it's happening inside and outside of the organization. So um, this next graph kind of maps to each of the chapters within the book. And first, there is a recollection, as we will do in the presentation today, about what was the background and what was the context upon which these machines arrive, and overall mechanization and computerization that was taking place. Another thing to that is worth mentioning here is that as the book progresses, the sources change. So there is a rainbow of sources. So very much the book starts looking at the patent record and looking at surviving business documents, and as it's moving along, it starts to combine with um, internal internal magazines, newspaper articles, and eventually interviews and web-based material, including YouTube and some other stuff. So there is a very rich number of sources that are guiding the research. So then, first, the book starts with a recollection and kind of setting the scene by telling about this process of mechanization leading to the computerization of retail banking. It then deals with an issue that we will talk about today, which is that of invention. So I won't say that much more about that until later on in the talk. Um, uh, it then deals with more issues which might be of interest to this group, which is the creation of pipelines and how these infrastructures started to take place. And this is the move from, as we will see, standalone machines to machines that are integrated into a larger computer network, and what had to happen for this machine to take place. But the difference here is that or the fine point here is that you could say that the machines were online to the moment that they are connected to a mini computer or to a larger computer network. The issue from my point of view is that the transaction is not completely online. It takes even longer than just connecting the machine, so that this transaction is the from the moment that the customer or the user is introducing the token, or in this case a card, to start the transaction until it's finalized. It takes a bit longer, and there are other processes that had to take place, and hence why I'm teasing out this debate as to when is online really online kind of debate, right? um, Once that we have them as part of a longer in local network, something that is quite important in the US context, and certainly it takes its own features in the UK, is the creation of shared networks. And this is what really enables the creation of a global network where you can access your balance uh, wherever you are in the world. You can also see, by the way, how the each of the chapters is also mapping to a particular decade. So we have kind of a matrix where each chapter is trying to look at one particular user group and one particular moment in time. And then if you want to a third axis where it's looking at one particular aspect of the technology, as well as yet in another axis how this development is linking to the wider working of the financial institution. In this sense, there comes a point in time where we leave the financial institution itself and we allowed for for the participation of other type of organizations, and specifically what is called the independent ATM deployers, which are today managing probably about half the number of ATMs deployed in the US and the UK, or as they are not as in a independent ATM deployers are not allowed in every country for different regulatory concerns. Then towards the end, it's something that it's one of the main takeaways from the book, and something that we will talk about a little bit more in a moment, which is this issue between innovation and trust, and kind of like a psychotic type of values that financial institutions have to deal or have dealt with in the rollout of these devices. So we will talk more today about this element of being a labor saving device and uh, displacement of branch staff, something that we will leave for the book, which is this issue of phantom withdrawals, which probably some of you just looking at the chat were involved with, and we can have a discussion around that. And certainly something that I'm retaking in the chat is this issue about trust and modernity, and this what I've just described as a psychotic, having to reconcile very different values, right? And then the book ends with a quick look at what is the future of this technology in the context of an increasingly cashless economy. So that is the book in a nutshell. The key concepts that are coming out from it are probably three, if not four. The fourth one that is not listed is the importance of transaction volume to help to understand and determine how financial institutions adopt and manage change. It's something that could have been highlighted much more in the book, but certainly something that is driving the discussion in terms of concepts is, as you would expect, the diffusion of innovation and the diffusion of innovation across borders. Secondly, this economics term called network externalities, which is why a network is more, to the elements as to why a network or a particular technology is more valuable when you have newer members and newer users. It's what happens around telephones or mobile phones. A mobile phone or a telephone in itself has no value. It has value to the extent that you can contact and link with other people. Yes, and to some extent, this is happening as well within the ATMs, and certainly something that has been used in quantitative studies, and something that we will talk about today, which is this issue about unique and threshold capability. So I'll explain that in a moment. So let's take a step back and let's look at the overall the growth of this technology, just to remind us why we're looking at it. And this was actual numbers until 2016, estimates until 2020. It will be interesting to see how the global adoption of ATMs, which is what this graph is representing, changes during COVID, as we will see will accelerate the displacement of some of these devices in some countries. But certainly what you see and what we're trying to represent here is that we have a tipping point around, if I can, yeah, a tipping point around the 1980s, and hence the importance of shared networks to help explain um, this rise, as it helps or enables a number of financial institutions to go into this. But we'll talk about this in a moment. This is a quick look at branch, to remind you, or to set the context of what was happening around the 1930s. It is very good representation in the sense that the gender is clearly male, as it was mainly men who were working in banks across the world. There are instances where women take a role around the end of the 19th century and in around the First World War, at least in the UK. But that is the work of John Black and some other people. It was kind of very in a very limited way. The other thing that the graph is trying to represent or to show is the level of mechanization that you have, which is uh, just coming in, things as typewriters and stenographs, but mainly people are working with manually and establishing relationships with individuals, and as the way the what the picture is trying to portray is that it's the manager who is in charge of most of this relationship. And that is something that Akril and Hannah have explored in some more depth in their book around in their corporate history of Barclays, as to how the branch is the main source of value added for financial institutions all the way until at least the 1960s. It is the branch manager who holds all of the relationships, who is making the credit allocation, who is basically running the bank. Headquarters are very small, and here is one of the long-term effects of computer technology, is that all of this is lost. All of these activities are then centralized at headquarters, and there is a dumbing down of the activities that are happening at the branch. But not only that, but mechanization, it goes hand in hand with the introduction of um, women into the workplace. And this is, as you can see, the role that they take initially is to replace men in labor as a labor saving device. We see other elements of mechanization coming in and being much more present, such as filling cabinets. We cannot see it from here, but staplers and clips and paper clips, where the humble paper clip were quite important, as was the introduction of telephones and later on mechanical typewriters. But women then were allowing young men to take on activities that otherwise would have been done by them. And part of the reason is the confluence of 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 the two wars. There is a whole generation, certainly in Europe, to a lesser extent in North America, but in most of the warring countries, that there were not enough young men to take up the management positions in the future, and that is allowing women to come in and to move from secretarial roles into customer facing activities, although still limited, very much until the 1970s, when women married, then they had to leave the organization. And in some banks, women were not allowed to deal with customers at all. uh, Nevertheless, it is in this context that we see the introduction of computers in general, right? So this is inside the bank. What is happening outside the bank? What we have outside the bank, and um, sorry if you see a green. I don't know if you're seeing a green line here. I don't know where it came from, but Anyway, so what we see is also a long story where there are devices being tried out to replace the branch, or rather than to replace the branch, to complement the branch as a point of contact with customers. Um, the earliest recorded mention that I found in the patent record is from 1925, when there is this something about using using cars, or some way, some sort of device to link financial institutions with this idea of convenience, and that was really interesting, because this is just at the very much at the beginning of the introduction of cars into the um, overall economy, and of course it was a patent in the US. But really things pick up from the 1930s, either in the patent record, and this reference from Lindsay seems to have been deployed. There are some pictures of actually being used, and that's why I'm taking it as a reference, as well as there are references of mobile branches, or branches within some sort of vehicle, to reach um, primarily agricultural clients, and I haven't found any firm record of them being used. There are mentions of them, or anecdotal evidence. The earliest record that I found is 1948 in the Netherlands. Yes, and later on we see an evolution of this coming, especially around this idea of drive-through windows and drive-through banking with the use of pneumatic tubes in the 1960s. They are very much in vogue, and they are tried out, these branches in different countries, not only in Europe. The first one in Europe was in Belgium, the UK. Different banks try it out a number of times, and hence this picture from just outside of Heathrow in 1994. But ultimately, they have relatively little success in the UK. I think one of the newcomer banks, Atom Bank, or one of those, has also tried to put one recently in the last 10 years, something like that. But again, the issue of transaction volume. They don't have the transaction volume that they would have in other parts. Certainly in the south of the U.S., they remain a very important element of distribution, and in other countries, the Middle East, Saudi Arabia, Jordan, the Emirates, and interestingly, in Central America, all the way into northern Colombia, and that had to do primarily with issues of security rather than convenience. Having moms, particularly, driving around with children and not having to come out of the car. But that's what kind of like drive-throughs are today. But there are other devices. One of them that we are documenting these days, which is called the Hinky Dinky, and Hinky Dinky was a retail chain, medium-sized retail chain in the U.S., which was which in 1974 created this booth, or this arrangement with one of the savings banks, and this was to bring the bank closer to the point of where the transaction was taking place. The devices didn't take off. They were part of what today we would call point of sale terminal experiments from retailers and banks, and it had to do with U.S. saving banks being able to then offer deposit accounts, and this was one of the ways in which they were trying to make it more interesting to the customers. In the same way, some of the banks start to play with telephone banking, and at that point in time, they were called home banking. And the point of this then is that there are alternatives to the ATM when this is coming into place. Now, the main idea of the ATM, or certainly during the 1970s and 1980s, was to help reduce congestion at branches, and that was not only as in the case of the U.S. savings banks, but savings banks in other countries like in Sweden and in Norway were also being, and in the UK, being able to attract more customers. But banks were also trying to bring in a large number of people who were excluded or who were outside of the banking system, to that point in time, to their midst. It was more to do with not losing the large number of working class customers rather than trying to expand their customer base. You can take it in you can take this argument with a pinch of salt, but it was basically, how do we deal with larger numbers of customers and avoid these long queues at the branch. So uh, ATMs then are helping to do that. Although in some countries, even if you have the ATMs, people still queue to use them, and there is a issue here of management, because you could train instead of having the guy as a police, you can train him to provide some of the services and reduce these queues. But that's another story. So convenience is supposed to, or is often quoted as an element driving these machines, but there are also other elements, as I have briefly discussed. One of them, how to capture this customer base. As you can imagine, most people in 1970 were working in a cash economy. Very few of them had a checking account. And this is an important difference, because certainly in Europe and in North America, there were people who had some form of experience, some sort of knowledge of financial services, because, for example, in the UK, people would save at a building society in order to get a mortgage, or would put some of their savings in a savings bank, and therefore, there was interaction with these specialist financial institutions. But very few had personal checks. Very few people had in 1970 a current account. Most people were paid in cash. So bringing these people in meant, in terms of automation, digitalizing, customer records, creating direct debits, creating these links with large customers such as manufacturing, or primarily manufacturing companies. So there was direct to account payment of salaries, but then that is, money coming in to the account. The question is, how do you get money out? And hence these alternatives for distribution of cash, and the importance of playing with different alternatives, such as the hinky dinky, such as the home bank, such as the ATM. And it is the ATM, the one that eventually is successful from these other alternative solutions. Now, as you can see in the graph, this idea of convenience, or this idea of being able to service customers outside of the of banking hours, which comes out again or will come out again in a moment, around the issue of invention. Yes, it's certainly not there anymore. This is the annual volume of transactions per hour from Link in the UK, and you can see that most transactions, about 80% of transactions, take place around lunchtime. Yes, so in the peak of the day. So it is an alternative to declogging branches. And therefore, or not therefore, but what we're illustrating here is this idea of how the device is not only successful, but is sold and it's perceived as something that it's somewhat unique, that is as a potential, or a potential source of competitive advantage. Certainly the case of Citibank in the US, it's automation and ATMs in particular, as Citibank developed its own ATMs from scratch, the Cat 1 and Cat 2 devices, which were the first. The Cat 2 certainly was the first touch screen device. Um, and to what extent did Citibank actually develop a source of competitive advantages on the back of automation is something that can be debated. It's certainly something that during the time that John Reed was at Citibank, first as a up and coming manager, eventually as CEO and later chairman, they very much emphasized until the 1990s. Nonetheless, uh, these other devices like Hinky Dinky, as you could, it doesn't take a leap of imagination to think that they were more cost-effective alternative. Well, not cost-effective. They were cheaper than ATMs. They are not cost-effective because they had a much larger fraud than ATMs at the time. Where something that how were customers going to engage with this, and would customers prefer one bank if they had ATMs as opposed to having something else to be able to do it, including having to go to the branch and having to queue um, for perhaps a long time. And I'm sure some of the people in the audience remember many instances of having to queue sometimes outside a branch to be able to engage in a financial transactions that today we can do it on our mobile phone or through some other means. So uh, but this position is not stable as you allow time to progress. You see ATMs turning from being a unique source of competitive advantage to being something that is threshold, something that is required for competition, something that if you don't have, you are not a credible participant. And we see this even uh, uh, challenger banks and some of the online banks before them, or challenger banks as they are called today, that they have to have some sort of physical presence, and they need to have access to ATM networks. Otherwise, people are not interested and will not be interested in having you know an account with them. So moving on, then let's look at this issue of challenges between modernity and or the challenge of modernity. Something that we see very often in the record is ATMs and the first ATM and the first transaction of an ATMs being widely advertised, and at the same time in popular culture we see ATMs appearing in different shapes and form. But this combination between trust and values of solidity that is represented with banks, with this classical architecture, is somewhat opposed to the modernity implied by ATMs as a step forward. So this is what I meant by this challenge of modernity, that on the one hand, the bank wants to be seen as innovative and modern and delivering this, being at the cusp of technological change, but that is in itself a risky endeavor, which is opposed to, you know, having to portray this value of being reliable, conservative, and a place where you can play, your money is going to be safe, which is coming from all of these bank runs that happened in the 19th century and the early 20th century. So by themselves, we have them at odds. Um, and if we combine these elements of trust and negligence and fraud, the more innovative that you are, then also you're going to have to be dealing with elements of negligence and fraud and spam. No, and in this case, the different forms in which uh, you have to attack an ATM, most of them until very, very recently involve having to actually access the machine. Um, as opposed to making the machines work well. We cannot see the graph very well, it's very small, but basically what it's showing is the number of complaints against phantom withdrawals or withdrawals that are being challenged as not having taken place between financial institutions, that's building societies and banks in the UK, rising significantly in the mid 1980s and 1990s, and then dying down. So there is a problem then with this issue of trust, because here you have a new technology, whatever the name it is, and you have to make people use them, and you have to convince people to use them, and you have to make it in a way that people use them. Otherwise, all of your investment, and this is the issue of network externalities, you have to make the investment in the infrastructure upfront, which is very expensive. If people don't use it, then you're into, this thing of being innovative can be costly, because if people don't use it, then you are in trouble. You're in trouble as a financial institution, and certainly you're in trouble as a manager. So this is this challenge of modernity. How do we balance the different elements between adopting new technology and portraying this adoption of technology as the bank being or the financial institution being modern and innovative, with issues of trust, issues of negligence and fraud, and also our values that we can be trustworthy and reliable. Right. So those are kind of like the things that are being um, discussed throughout the book. Let's look at some of the other issues that are coming more to gearing up to the audience. Um, so first, the issue of invention, and it's something that permeates the history of computing, or at least my experience in looking at the history of computing, as to who is the first. Um, and this issue is something that very often is being discussed around the idea of disruptive innovation, which was coined by Clayton Christensen at Harvard Business School. It certainly permeates the use of ATMs as the firing gun for uh, fintech these days. And what I'm gonna show, or what I'm gonna try to argue in the next 3 or 4 slides, is that ATMs were not the start of fintech, although we can leave that for some other day. But certainly they were not a disruptive innovation in the way that Christensen has defined it. Why? So let's take a step back and let's look at what you would find in terms of who is inventor of the ATM. In the web, you would typically find one of four names, or all of them together. John Shepard Barron, Luther Simjian, Donald Wetzel in the US, and John Shepard Barron in the UK, and James Goodfellow in the UK as well. Now, each of them is uh, linked to a particular device. We will talk about these devices in a moment. Um, the problem that I have with this story of innovation is that first it ignores the labor of ordinary employees as well as other engineers who were involved in the development of this machine. These machines were developed as thanks to group efforts, and they were developed through a cooperation between engineers and financial institutions, as I will tell in a moment. And secondly, the problem of this story of innovation is that it perpetuates gender, ethnic, religious, and the geographic divide that it's very much driving the story of overall innovation as being something that is developed by white middle class men in developed countries. But nonetheless, this might be a question of time. What you will see then is that John Shepard Barron is linked to the deployment of the De La Rue machine, the London Enfield Bank, or the of Barclays in 1967, and the predecessor of that, and there is some discussion as whether it is a predecessor or not, is the Simgean machine in Citibank in 1959, 1962, which is when it was operational. Simgean has there is a typo in an MIT web page, which I've just grown tired in tell them that there is a typo, because it points to 1939, and it's actually 1959. But nevertheless, it's now something that it's spread through the internet, and some people believe it that is true. The importance of the Simgean machine is because it appears in the patent record. Simgean was somebody who was very prolific engineer, large number of patents. It's a Reflectone company, had a number of involvements, but his thing was photography. There are different, camera booths and a number of things. That there is a large application of photography. It has nothing to do with computer technology. And indeed, that Simgean machine, what it does, as you can kind of see from the drawing, is that you would insert checks and or cash. It will take a photograph and then spit a photographic image of what you had deposited. Yes, that was the Simgean machine, and it was a lobby machine. So it's somewhere in between through the wall machine that it's trying to stop people coming into the branch, and um, the alternative. Of course, something that goes in, and there is a little bit more of a discussion in the book, is the challenges of having, for the first time, electronic equipment facing the inclemences of the weather. And in that sense, the UK, the north part of the US and Canada were very good laboratories to see these through, and it took quite a bit of challenge, as well as finding, you're putting money just facing the street. So how do we make this physically resilient? So plates, and it involves a number of companies, and that's one of the things that we will see in just a few seconds, why as companies that had been involved with banks providing security services and safes were involved in the development of these machines. So was this the first machine? Well, it's something that really is just out of convenience and to some extent laziness, because months before the machine is launched, about 6 months before that, the Financial Times and the Times are already discussing the advent of these devices. And actually, in May, a month before, they show a picture side by side of the Enfield machine, which is the De La Rue on this side of the picture, and the Chubb, which was developed at the same time by Chubb, which was primarily providing safes to and locks to banks and NatWest. Well, the predecessor of NatWest, which was National Westminster Bank. Um, Not only that, but within 2 days and in a completely independent development, we have a device called by a company called Meteor that very shortly after becomes part of what today is ABB. Then it was just the ASEA, the A in ABB, and it's working in Uppsala in Sweden. We're going to talk about this machine a little bit more in a second. And we had two devices that, when the things start to come out in the press, are delayed to see how the others work. One of them in Germany, and the other one in the UK. This one by a small startup called Spatec that eventually becomes part of Burroughs, was developed in conjunction with the Midland Bank. And it's an interesting device because the Midland Bank, in a rare occasion for a commercial bank, acts as venture capitalist and funds the whole development of the machine. This is the Spacetech team, and you cannot really see it, but in the background there is one of the prototypes. But the interesting thing or one of the more interesting things, is that there is evidence within archival records of Barclays, NatWest, and Midland talking about these devices and how they were going to structure these devices, not only between them directly, but also in the broader context of what was then called the Committee of London Clearing Banks. For those UK based, they know that this was the main body in which banks interacted with everybody else. It was the main barrier to enter into banking, and they had a automation subcommittee which was mainly driven by Barclays, but you could see that knowledge coming out, and the design of this device, the SpecTech device, is benefiting from what had been discussed and developed by the other two. More to the point about this being a disruptive not being a disruptive innovation, is that there is evidence of even earlier devices. This photograph is a conceptual device by Diebold. Diebold being also involved with banks providing safes and security services to the banks. It is not connected. It is just a TV, but and this was presented in San Francisco. So the idea of automating the retail transaction is very much there, and there is this reference that I have been unable to get more out of it. This is coming from the Star and Stripes, which I think Mr. Trump now has ended. It was the newspaper for the armed forces. And Japan was still being occupied at the time, and there was a big U.S. military presence in Japan. But just before the first Tokyo Olympics, we hear of a machine that is activated by a credit card that gives you money. It is not as a debit as the others, but it's as a credit. It is a 3-month credit at 5% rate or something like that. So the idea was there. The thing of Enfield being the first by literally weeks between, because there are weeks between the other two, is just a fluke of nature to some extent, and I think also of Barclays pushing its idea and its values of being an innovator very strongly and very successfully, as well as Midland and Royal Bank of Scotland, as now parent of NatWest, not being interested. So the point of the conclusion of this being an innovation is that there is no race to market, that there is no real unsatisfied need, and that there is ample evidence of collaboration and knowledge exchange. Now, just as a reference, this is how these machines were, or the activation tokens of these machines. So these were standalone devices that were operated through some form of card-like device, which had different degrees of security. The least secure one, we're talking 1967, 1968, is Meteor, as the card would just activate the device. Um, we see elements of what we call path dependence in the Delarue machine, because basically what it was a check that had a little bit extra, and this extra was guillotined within the machine, and so that the transaction can then be put through the normal check clearing system. The Chove machine used an eighth of a Hollerith card, and the same idea of a punch card to code the pin. The Delarue machine had no pin in the first version. The second version, it didn't get to a third version of the machine, it did have a pin. Um, and then the SpecTech, which was the most secure of them. Inside the machine, inside the arrow, there were a couple of radioactive dots, so that the machine could tell that the card had been inserted in the right way. The information was recorded in a piece of magnetic tape. Uh, it also had a feature that half of the head recorded in one direction and the other half in the opposite direction. This security feature eventually turned out to be very difficult. It was difficult to break in, but it was also very easy to break. Also, the card was not resilient, and then at the request of the bank, it had to physically make a hole because it could only be used 20 times. And this is again an issue of how the whole thing is not totally digitalized, and you needed some sort of process to check that the customer was still of good credit standing. It was not issued to everybody because you could see that it was from the start it was 10 pounds. Now 10 pounds in 1967 is not the same value of 10 pounds today, so not everybody could be afforded a credit of 10 or 50 pounds to be carrying in their pocket, right? So again, this is aimed at a particular segment of customers. Now let's look at some of the machines and some of the fascias. And again, you can see this is again the Reflectone, the DocuTel, that it's very popular in the internet, and the Omron, which is the company that somehow seems linked to that first device in 1966. But as I say, the story is a little bit murky because really they appear in the patent record in 1969, which is when they launched their first device. All of them then are analog devices. They are standalone devices. They are not connected until late in the 1970s, and the most initially successful of that was the IBM, uh, given the big links that IBM already had with financial institutions. So throughout the 1970s, we see a large number of manufacturings coming into the fore. Some of them not traditionally involved with banks, such as the Meteor, but the Meteor was the first device that was installed across borders, as I said. Chubb, which struggled, they tried to diversify, but they were really not well managed, and they saw the potential of the device, but eventually they made the wrong investments. They didn't have the capabilities as the computer manufacturers to be able to integrate this device into the larger computer network, right? And Chubb eventually flops as a not as a going concern. It is broken up, but the original Chubb company that dated to the Victorian times ends up in 1982, 1984, something like that, right? Diebold still there, and in the same way, DocuTel, which was one of the other U.S. innovators, is unable to continue and make this jump to connect the device to the larger computer networks. It is IBM who had everything to conquer the market until it doesn't. And it doesn't, as the 1980s, as some of you well know, were a terrible time for IBM management-wise. They kind of lost track, and as part of that, um, they decided that, or to ignore that the IBM cash machines were being very successful, and they tried to impose a new suite of computer um, uh, yes, a complete suite of computer solutions, and making the previous one irrelevant, and that just backfired, opening the door to NCR and Diebold to enter the market, and eventually it's NCR and German manufacturer Wincor that uh, basically control the market for ATMs until the 1990s, when NCR is taken over by AT&T. But that's another story. In the meantime, and now up to the 1970s, it was the Japanese who were the main manufacturer of ATMs worldwide. However, 100% of these devices were installed in Japan. They never go out, and the only one that I know of in terms of manufacturer that has any impact in the global outside of Japan of significance is Fujitsu, and that's because of um, joined with an alliance in which they developed the devices for what is now the third largest retail bank in Spain, which is Caixa Bank, formerly La Caixa or Caja de Ahorros de Barcelona. Right. Um, as these machines appear, or are start to develop in the 1970s, what we see is this coexistence of online and online devices, with the online devices slowly but steadily taking over. And we see this is from the UK, but we see the same thing, for example, in Korea and in some other places that actually developed. In most of the other countries, most of these early adoptions, such as Mexico in 1972 or Spain in 1969, is just a trial. They just installed one machine to see what happens and whether they are working, in the same way that they installed one or two drive-throughs. Banks are most banks are um, trying to go with tried and tested uh, technology. Right. So then, what is more to the relevant to this audience? What we see literally behind the scenes is this movement between machines that were completely analog, that had they were wired to do a particular type of of uh, of activity, to joining the general computing by installing effectively personal computers as their main um, uh, processing units. First, using OS2, if IBM OS2, and that remained until they very much the dominant part until basically today, where most ATMs, or at least a big number of ATMs, are running on Windows XP, right? So keeping these devices going then becomes not only something that you need to compete, but becomes very expensive, as you literally for some types of updates have to visit each and every one of them, and to be able to make that change. Yeah. So keeping them going, it's something that still permeates, or it's very much what it's guiding the discussion today. Right, shared networks. Very quickly, as we're probably running out of. I'm going over the top in terms of time. Shared networks are the big thing, because what we have to do is, how do we make a card that can be starting a transaction internationally work, and check that you send the signal back in 30 seconds or less. And that's the whole thing about the shared networks are very big in the US, to as we will. Yes, they're very, very big in the US, where at one point in time there are 250 ATMs as a way to share the investment in making this device work. And it's really where I think the most interesting part of the history of computing comes around, because it's not only about resilient network and resilient connections, but also where encryption and the application, the first, as I understand it, the first application of or commercial application of encryption is taking place in order to protect that yes no command to release the funds is coming, and protecting that yes no command, right? So in the meantime, this is adoption as per number of inhabitants, and we can clearly see that where Japan up to 1980s is the leading country in terms of adoption in absolute and relative terms. It has since in most countries stabilized or already declining. For example, in Spain and in the USA, if we push this to 2021, we will probably see a deeper decline, except for Sweden. So even though Sweden is very much this poster child of a cashless society in terms of uh, number of ATMs per number of inhabitants, it has pretty much remained stable, which is something noteworthy, right? Right. And these machines are increasingly being managed by ATM deployers. As you can see, the growth in the black part of the line, it was already 57% of the total UK stock in 2016. However, most of the volume volume of transaction remains within the bank's part of that. So I'm just gonna very quickly go through to end the chat the issue of worker displacement and data that has been collected for the US, and this is more fine-tuned because it's a number of actual tellers, actual people managing the desk. Yes, in the branch, as not everybody in the branch is involved in customer facing activities. Um, and in the UK, we see both that the displacement of um, employees takes a long lead, or it's very much lagged to the introduction of new technology as measured by ATMs. There are 2 points here that we're going to look again in the next graph, as these are the point of inflection in 1980 is when it's when the tipping point of global adoption. And this other point is the introduction or there's another tipping point with the introduction of AIDs in terms of the number of machines in the UK. So if we see the rate of change, we see that that 1980 or that change in 1980 is much more substantial than the introduction of ADAs in the 1990s. But nevertheless, the reduction in banks staff takes place, good 10 years after the tipping point in the adoption of the technology. Why? Because initially financial institutions, rather than just displacing employees, they try to accommodate them into other uh, retail facing activities, such as selling of insurance, selling of stock, so on and so forth. Yeah, so there is caution then in the way that this is rolled out. Right. So to summarize, what is this story telling us? First, that it's difficult to think of disruptive innovations in retail finance. Certainly, the ATM was not one of these devices. Uh, Secondly, that changes in retail payment systems are slow, sometimes measured in decades. Um, Three, looking into the future, ATMs and banks and bank branches are the only two channels that banks control 100%, and that you need for certain types of transactions when you need client present. So for every discussion in the popular press of a perfect storm and branches and ATMs disappearing, I don't think that that is going to be the case. It doesn't mean that we're going to have the same number of ATMs or that we're going to have the same number of branches, but we're still going to need some form of client present. And I don't think that using, for example, post office branches is a complete substitute of that. Um, there is no room for complacency. There is much more about, there's a bigger story to tell about how to make these machines work, how to make these networks of machines work and keep them going, as the case of the operating system shows, than about what brings them together. What was the white heat of innovation? Why did they appear? Right. And finally, just briefly, and probably I didn't make enough emphasis on this. These are industry-specific innovations that are primarily urban, and which might have had, or there's something that is still going on. Adverse events on rural areas and minorities, as they might feel excluded from or not having access, as it's very difficult to put you know a, a box full of cash in the middle of nowhere. And therefore, rural communities or people that don't have access to a bank account don't really have access to this. So thank you very much.
Bernardo, thank you for that. Doran, would you like to say a word of thanks to Bernardo on behalf of everyone?
With the greatest pleasure.
Have some questions.
With the greatest pleasure. Bernardo, thanks. That was an absolutely comprehensive, not to say encyclopedic tour of both the history and the practice of ATMs. I'm going to abuse my position and ask you a question. You mentioned negligence and fraud. I wondered to what extent banks and financial institutions are ready to acknowledge error. Because my understanding is from a major bank, which will remain nameless, that they will put their hand on their heart and never acknowledge mechanical or technical error as a matter of policy, quite regardless of whether there's a disparity between the money dispensed and the money accounted for. I was quite shocked at this. I understand absolutely why. I wonder if you can say whether you included a technical error in your categories of negligence and fraud.
Yes, Doran, indeed. And actually, there is a long discussion in, I believe, chapter 8 around these so-called phantom withdrawals. And I think the issue is deeper in two ways. First, from practical perspective, and this is what I was trying to very quickly discuss. When you're launching a new device, when you're launching a new technology, yes, you all are pretty much aware of issues of adoption and what we call appropriation, ways in which customers are going to use the device which engineers did not foresee, right? Now, so you have that, you have appropriation, and you have naturally teething issues in making the technology work. We were just talking a moment about, eventually when you have millions of transactions, you start to notice things that you didn't intend to, but they are there. The example when we were talking about this today was blood clots with AstraZeneca. You have 7 million inoculations and 6 cases of blood clots. Eventually, things happen, right? Here is the balance then. From a financial institution's perspective, when and how do I manage this? How do I acknowledge that there has been an error with the technology? And how do I separate that from the customer? Because I cannot upfront in the initial stages of a technology tell my customer that they are lying. Yes. At the same time, if I tell and take their argument at face value, this guy is going to talk to their mate, and their mate to their mate, and suddenly I'm going to have a queue of people claiming that they haven't had a transaction. So how do I balance that? Yes, and how do I manage that? It's that one of that tensions that I was trying to portray with this issue of negligence and fraud, as opposed to trust. As I said, this is one element of this equation. The other element is that once that the technology is tried and tested, and that's why it makes sense for financial institutions in this case outside of the US and the UK or Europe to wait and see what it's tried and tested. Yes, I can then be sure that it is the technology that is working, and therefore put all of the blame, and not necessarily outright blame, but the proof into the customer. that, having looked at this and as I said, it's documented in a little bit more detail in the book around um, transaction withdrawals. I ended up talking to a QC who's specialized in technology and particularly on ATM withdrawals, and he was the one that led two, we don't call them that in the UK, class action suits against ATM withdrawals, which is the other element. Are you going to go, okay, you withdraw £10, they don't come out. You go and you claim it to your branch where, again, you're usually going. Now you're not going to to the same branch all of the time, but that's another story. At 1970s, 1980s, you're not banking with a bank, you're banking with a branch. Yeah. And that was the other issue about mechanization and moving this into headquarters. And Mr. Swade, we know you. I might be a new manager, but my assistant will tell me, Mr. Swade has been coming here for 15 years. Yes, he's a good customer. We're not going to lose him for £10. Here's the £10. End of story. Okay. Now, if I say no, the cost of a solicitor is more than £10. You're not going to fight it. And that was the interesting thing about this class action suit, because it was a large number of customers that got together, and even then they lost to the banks. And they lost particularly because under UK law, then you would have to, and this is where I was coming to, UK law, Mexican law, a lot of overwhelmingly, the new regulation that I am aware of that has been enacted from 2000 until today is given banks the position where it is the customer who has to prove that the technology has failed. But this is a flaw because you as a user don't have access to, for example, the programming or the records. It is the bank that has to produce these records so you can prove that the technology has not worked. So I think that is an imbalance in that it has. I mean, I don't mention it in that way, but well, in that extent. But certainly the issue of phantom withdrawals and how it was, when phantom there is this class action suit, there is actually a case which was, no way that this guy had been in the wrong, and even in those two instances, banks won. Yes, and now it has been enacted into law. I understand that is not the case in Germany, where for other reasons, but I don't know all of the details of how it works in Germany.
Bernardo, thank you. I've diverted myself from the main purpose of thanking you. So firstly, thank you hugely for an absolutely a tour de force of a treatment of this topic. On behalf of everybody, thank you very, very much. And thank you for joining us and for an absolutely superb presentation. Roger, would you want to manage questions?
I'll manage questions. We had a number of comments along the way, which we'll collect up and pass on to Bernard. But there were some questions. One of them came from Brian Randall, which was concerning the nature of banking in the United States and the limitations on crossing state boundaries. Brian, would you like to just say a word about the question you asked, which was related also, I think, to why perhaps ATMs were more extensive in the UK and rather than in the US. Brian. You're muted.
You're muted, Randall.
Brian, you may need to hold the.
That's okay. No. I can never remember whether I'm on the machine, which has got a touch-sensitive screen or not. Okay. Yeah, I was surprised in the late 1960s or early 1970s to find out how viewed in America, British banking was regarded as very strong, and how it was the British banks with the big ones the ones we now think of as the big ones, like the Bank of America and so on, were in fact regional banks. Bank of America was in fact really Bank of California. And so organizations like Burroughs were very much working with and developing with big British banks. And that was a memory that I had. And some people who've responded to my chat line have confirmed the accuracy of that memory.
Yes, well, yes and no. Certainly, there is an argument that there is an argument that European banks had much larger branch networks than U.S. banks. A quick comparison: I don't remember the biggest saving banks in terms of assets in the U.S. in 1970, 1972 was the Philadelphia Savings Fund Society. And it had something in the order, memory fails, of $400 million in terms of assets. And that's how banks were measured in those days, by how many deposits that you had. The PSFS had 70 branches in Philadelphia, or in around Philadelphia, with Pennsylvania being a state that enabled within state branching and being a relatively large state. However, or in comparison, Lloyds Bank, which at the time was the smallest of the four largest British banks by some measures, or by a gap, had in the order of 2,000 branches in the UK, and this is before all of the mergers and acquisitions. So the problem, or you're getting one of the European branches, one of the European banks, having one of the European banks as a client was very much something of a priority for US computer manufacturers. And indeed, Burroughs, the Midland Bank, which was then the biggest bank in the world in terms of assets, primarily because of its correspondent banking relationships, was a client of Burroughs. And the interesting thing is that they funded the development of the Spatec machine, and once that they thought that it was kind of ready to go into production, then they forced Spatec to sell to Burroughs. In the same way, the IBM machine routes to Lloyd's, being a client of IBM, and taking a step back, and rather than rushing into this, they had at least two very thorough, detailed reviews of their automation and computerization, in which staff from Lloyd's and staff from IBM looked at their needs and their long-term needs, and developed a plan of automation from that. It was not in one of these original two plans, but the IBM cash machine was developed thanks to the interest of Lloyd's.
I believe there was also a lot of innovation, sort of transatlantic innovation, concerning check processing and the like.
Yes, that was but that's another story. The basically the UK banks sat on the sidelines while the US, the American Bankers Association, decided on magnetic ink character recognition, and they couldn't, for a very long time. Most of the work of this automation committee that I mentioned was around check automatization, until basically Barclays. I think it was Barclays who gave up and said, okay, we're going with the US standard. There's no point in us trying to agree. We're going to get with the US standard, and we're going to implement it now, and that's it. In the fringes of that, but it's just interesting, because all but this committee's workings are missing from the archives of the CLBC archives in London Metropolitan Archives, and and the very little that I have been able to find from this committee has been, you know, drips and drops in other archives. So you know, the reason what I've been looking at is because Shepard Barron argues in his argues in his story of innovation that he couldn't get money out on a Saturday afternoon, and that day in the evening, uh, sitting in his bathtub talking to his rubber dog, had this idea of the cash machine. He called the you know, the vice chairman of Barclays, and then the chairman arrived in his Rolls Royce the following Monday morning with a contract to give it to him. And it's an elitist story, to be honest. It's a UK elitist story of a public, and I don't want to be offensive, but it's Shepard Barron is he comes from a family that of public service from India. So I think that they are more British than the British. A little bit of I don't know, the Queen once has made fun of Ian Paisley kind of thing, you know, that they have conceptualized. And he went to Stowe, he went to Cambridge, he didn't finish in Cambridge. Yes. So this thing of, and then he married the daughter of what had been the chairman of Royal Bank of Scotland, when Royal Bank of Scotland at the time was a very minuscule Scottish bank. Yes, which turned out to be good, but that's another story. But so I think that there is an element of elitism in the story of Shepard Barron, tied with Barclays using it to continue to fuel this value and this idea and this mystique of being an innovative bank, which was something that started to develop in the 1960s. Now, sorry, just to finish answer your question, the thing that changes this a little bit is the introduction of the IBM 360, because IBM 360 enables, you know, small banks in the US and savings banks and building societies in the UK to jump into automation. And in the UK, it was the digitalization in 1971 that really pushes medium-sized financial institutions in the UK to automate.
Okay, if I might quickly go back to Doran's point, yes. I think my understanding was that another important difference between ATM situation in America and in Britain was the legal situation with respect to with the legal responsibilities of banks with respect to their customers in America, which were much more favorable to customers than the situation in Britain.
Okay, I thought that you were going to mention that in the US, you know, as I said, the IBM 360 then enabled the average US bank to automate and start looking at these things seriously. In the cases of states where unit banking was prevalent, such as Illinois, then that's the importance of shared networks and outsourcing services. But I think it was more important that there was, until 1984 in the US, there was inconsistency across states and within state regulators as to whether ATMs were or not a branch, and whether they required the same regulatory approval as branches. Yeah, that I think that was then you have what you mentioned in terms of the customers, that also changes across states, and eventually that leads to the introduction of cameras in the US. Yes.
Strongly resisted in the UK, I understand.
Can we, Vince
Please.
Chadwick has got a question, if you'd like to put it.
Yes, thank you. Can you hear me okay?
Fine.
Yes.
Thank you. Thank you for the talk, Bernardo. Nice to see that you used the the Spatec card I sent you a picture of there for your presentation. Having read your book, which I do recommend anybody who's interested to read Bernardo's book.
Thank you very much.
But my question is really not concerning the banks particularly, but I wonder what the business model is of the people who operate independent cash dispenser networks in post offices, sorry, not post offices, but small shops, petrol stations and that, the ones that don't make a charge for withdrawals. Where does the payment for installing and operating and maintaining those come from?
Briefly, in the UK and in the US as well, shared networks are typically priced on a closed cost recuperating system. So it's what it's called the interchange fee. And let me, sorry, let me run this again. So what we have is the message going in one direction and the authorization going in another. But what we have in the same way is that if the withdrawal is being activated in a device that it's not part of the bank, as it's what this is trying to show, then there is going to be an interchange fee going to be charged. There might be a disloyalty charge as well. So these IDAs benefit, particularly I think that you are referring to the UK, because the UK is and in some other countries, but especially the UK is being one of the largest, is unique as not charging with withdrawal fees. In the US, for example, and in Mexico, you would be charged a disloyalty charge, and therefore the IDA and the bank that is providing the service will benefit from this. So, but in the case of the UK, which is where I think your question is coming from, David, the business model is to place these machines in areas that are not serviced by banks, that will have sufficient transaction volume to generate this transaction fee in some way. How do you sell it to the publican, or how do you sell it to the small retail store? Part of the business model, at least initially, was to sell the devices that typically, or just as an example, were relatively cheap. The brand name, or the ones that developed this business model, was based in Mississippi, and it's called Triton, and they can go as low as £2,000 or £3,000 per machine. And what you sell to these guys is I think the pub one is easier. Is well, you come to the public and you say, well, here's going to come a guy with his mates, and it's going to be the time for him to pay the next round. And if she doesn't have the cash, then he's going to go out to the cash machine. The problem is that his mates, not wanting to lose on that round, are going to go out with him, and then they go to another pub potentially. If you have the machine inside the pub, then they don't have to leave, and they continue to spend more. So that's one element. You don't lose the customers. Secondly, they are called replenish machine. So you get cash out of the teller and put it into the machine. Yes. So you are recycling the cash within that small location. But so and then you get charged a fraction of this interchange fee for the IDA deployer to manage your relationship with a larger network. So the business model for the IDA is in selling the devices, selling cheap devices, yes, and capturing a portion or all of the interchange fee, either in a closed system. When it's not a closed system, in a system in the UK where there is no disloyalty charge, or capturing a portion of the interchange fee and a portion of the disloyalty fee from systems where they do. In terms of volume, this allows for all sizes of IDAs, from people that basically service, for example, credit unions, 2 or 3 credit unions, and they're basically giving them the link with the networks, to big, large multinationals. The biggest one of them, they are 2. The biggest one of them is called Cartronics, and it used to be based in Houston, but it was just being taken over. But Cartronics, to give you an idea, Cartronics manages 20%, 50% more ATMs than the biggest banks. Well, it's the single biggest manager of directly owned or managed ATMs, both in the US and the UK. I don't remember the number offhand, but Bank of America might have about 10,000 ATMs across the US. Cartronics might have 20,000 or 15,000 easily. By itself, and it's the same way in the UK. The biggest one is the Royal Bank of Scotland, but Cartronics has much more. But I said it's not having the devices; it's having the volume that goes through the devices, because Bank of America and Royal Bank of Scotland have much more volume than Cartronics, and that volume comes from their on-branch devices, as well as putting them where the customers are. In the biggest net outflows of Matrix of Link, which is the UK network, go to machines established in the forecourts of the 3 big supermarkets. Co-op, Tesco's, Asda. Yeah, those are the machines that are generating most of the volume, individual volume in Link, and that is paid by the likes of Santander or Atom Bank, or people that don't have the locations or have very small machines.
Okay, so what you're saying really is that if I go into a petrol station and I use the cash dispenser there and it's free, there's a payback that comes from the interchange fee, probably back from my bank or initially. And also, of course, as you say, the fact that I'll then spend the money on that site, which is to the benefit of the owner.
And what is happening in the UK and has been discussed, it has kind of died down because of COVID, but you have 2 issues. One of them is that Lloyd's, having acquired the Halifax and Bank of Scotland, and being a net contributor to Link, has been pushing for this free to withdrawal to end and to reinstate these loyalty charges. That is on one hand, and that has to be because Lloyd's changed its position from being kind of neutral in terms of interchange fee to being a net contributor because of the location of Bank of Scotland and especially Halifax ATMs. Broadly speaking, in that sense. But at the same time, as I've mentioned, you do see this reduction in the number of cash transactions, and that is, it's unclear to what extent the drop will stay, what economists call a structural change, because immediately on Monday, when pubs reopen, Link on the following day reported a huge rise in cash withdrawals. Link is not expecting to, and if you want to have a feel for this, Graham Mott in LinkedIn is very good at putting updates. He's the number 2 person at Link. But the point then is, and this is what Link and the banks and the ADAs have been pushing for Parliament to to have a rational reduction in the infrastructure. The current infrastructure, particularly in the UK, to manage cash was designed in 1960s, 1970s. Yes, we just saw how it built on the back of check clearing that it's coming from even from before. Yeah. And actually one of the first one of the first mainframes installed in the UK, it was not the first, but one of the first, was an IBM 1124, which was a little bit not the newest technology at the time, but and it was not the best IBM mainframe, but it was to help with check clearing. And the point that I'm trying to make is that you have a very large infrastructure. It's not only the banks; it is the security companies. It's the clearing inside of the of Bank of England and some of the link and so on and so forth. And it has to be redimensioned. So there is serious talk about how this redimension is to happen, and there is an appetite from different players for this redimension to be done in a rational, orderly way, rather than just randomly that might just break up the system. And you don't have to go very far. I'm sorry that I'm here in Mexico, when they try to change precisely around the issue of playing with these loyalty charges and so on and so forth, and they the network was about to become fully integrated, and they just lost that. And it was a mistake from the of the central bank that they quietly rectified when as soon as they had the chance. But anyway, if I may answer one of the questions from the chat, changing, saying that whether some ATMs ran on OS/2 until fairly recently, that is quite possible. Although most of them, or the vast majority of them, about 60%, it was hard to get an accurate number, were running on XP. And the ATM Industry Association then was trying to push everybody to adopt Windows 10, but they have gone beyond that, and they've developed in the last 2 years an AP, so that people are no longer can make interchanges easier. That's on the one hand, and on the other hand, what you have is people like Triton, which was this company in the US, who have developed their own system, as it's very costly to keep up with changes in operating system for the industry. Some countries, particularly Brazil, have played with alternative operating systems, and specifically with Linux, but it has remained very much regional things, or in this case just limited to Brazil rather than being widespread. And I don't have to tell you guys about and we see this in the history of computing a number of times. It used to be with IBM. Why do you go with something else if IBM works? The manager of the ATM fleet, whether it's in the retail side or where it's in the IT side, if they're going to argue to go with Linux or to go with any other operating system, the senior manager is going to be hard to say, well, why do you go with something else that is not Windows if Windows works, no, kind of thing. I mean, there's more sophisticated arguments around this, but to change the operating system in these devices, again, you would have to go in each and every one of them to do it, and sometimes the PC that they have inside won't be able to handle a much recent operating system. So you basically are better off waiting for the device to end its useful life and then just put a new one, and that's about 7 years.
Okay, there's a question from Martin Schmidt.
Yeah.
Yes, thank you, Roger, and also thank you for organizing this and making this possible. It's amazing to also see this great participation in the chat and the great knowledge. Bernardo, thank you so much for giving us this amazing overview of your book and also highlighting the most important points. So this really was your book in a nutshell, and I really liked reading it. And the question I'm now posing also came to my mind when I read your wonderful book. I have two questions more on the bigger picture. The first one would be, you talked about banks being modern. And I wonder how changing imaginations of modernity here are also changing the picture of the bank and therefore the picture or the image of the ATMs. So for example, until the 1970s, the society was really more prone to progress, and progress was way more important in the society. There was a big belief in the Western societies that progress is important. And then with the end of the economic booms, things changed. And for example, I worked a lot on the German savings banks, and my book will be published in German this year. And here you could really see how the savings banks like jumped on this idea of technological progress until the mid 1970s. And the wonderful picture you showed from Tübingen in Germany, the first ATM there, it was part of this. So these savings banks were really conservative institutions. And it is really not, it was really surprised that they installed ATMs and not like Deutsche Bank or the bigger banks. So this was really surprising, and they just jumped onto this idea of technological or societal progress. But if we think of the breaking or the structural break in the 1970s, this also represents in the way they deployed ATM networks afterwards. So I would just want to ask you if you could elaborate a little bit further on this. My second question would be, I found it really interesting how you showed this change from having an ATM as unique towards having an ATM as like a threshold for the market. And I wondered when I read your book if this is an explanation for the productivity paradox, where you have the difficulty of explaining that the deployment of computers, especially, that in the numbers in economics did not change the productivity. And I wonder if this is one explanation for this bigger conundrum of productivity.
Thank you, Martin. Always pleasure talking to you. And great ideas. I haven't thought of modernity in that way, and it's something that perhaps we want to retake later on and have a longer chat outside of this. Yes. But you're probably right that the idea of modernity changes, and that might affect some of this. The flip side to that is that they do get their fingers burnt initially of being too modern, and the literally the case in point is documented by Ian. His last name just went in the case of Barclays, and to some extent Midland Bank, but it was more clear in Barclays, trying to keep with the development of technology, and we're talking about 1960s, and seeing how keeping up with with the latest development was very, very costly. So they held back very quickly. And the case of Barclays, it was illustrating because the managers that made these decisions were not reprimanded. It was very much the bank said, well, this has been a learning experience, and we're not going to keep up with this. There is on the background, and that is more difficult to map, I guess, but it's well known, that computer manufacturers were promising more than they could deliver. Not only computer manufacturers, but IT people were consistently promising more than they could actually deliver, and delays and cost overruns were common. So that, I guess, also plays a role into that. I think I have a clearer answer about why savings banks than about the productivity paradox. And the productivity paradox was something that I on purpose avoided to tackle head on in this, as it would have made things more complicated than the story that I was trying to take. In terms of the productivity paradox, um, I guess the stronger evidence that I can point you is this lag between adoption and uh, replacement of personnel, or actually dropping of personnel, and being a big lag in that, and in saying, well, we're we're adopting it, but we're going to use personnel in trying in other ways. And that was very much something of the 1980s. It is really, specifically in the case of ATMs, uh, even in terms of absolute numbers, which were much larger in the UK, the US from 1980 onwards, there was a larger number of adoption of ATMs than in the UK. The 1970s, the ATMs in the 1970s were clunky. People didn't really like them. They were unreliable. So there was all of these reasons why they were trying to push out the technology, but people were not really convinced and using them. So I guess that measuring the materiality, measuring what we can see, which in this case is the number of machines, is not telling us the whole story. But capturing that other side, it's also a little bit difficult. Why savings banks? I'm not sure of the case in Germany, but certainly in the UK, certainly in the US, as I briefly mentioned, there was deregulation taking place, and I would be surprised if that was not the case in Germany, when savings banks were being allowed to accept deposits. In the US, these were called the now accounts, and you can see now accounts linked to, for example, what I've briefly mentioned, the hinky dinky, and then ATMs, as a way to push the in and out into the bank. Germany is a difficult one, because it's the savings banks, until very recently, if not until today, had by and large most of the retail market in all senses. The bigger banks, they worked with a different segment, and they've tried to grow in the retail sector, but as far as I know, or until I was following Germany, which I haven't in the last 5 years or so, it was the retail, it was the Sparkasse who really had the retail market, and the commercial banks and the Landesbank had these other segments, and they were finding it very, very hard to break away from that organically. If you want a similar to that, something like that happened. In Spain, the commercial banks were able to grow the retail space, but that's because I'm talking Santander and BBVA. To some extent, they allowed to have multiple accounts for a very long time, and there were issues when fiscal evasion issues around that until the last I think 3-4 years. Well, they have closed those holes recently, but you can see why the Spanish banks grow into Latin America. Yeah. They had excess financial capital, and more importantly, they had excess human capital. So and it was cheaper to buy in Latin America than to buy in Germany. In the UK, the clearing, what we used to call the clearing banks, had a presence in the mortgage market until they were able to buy the building societies, who changed the thing. And there is this whole story in not yes there is this whole number of episodes in Spain. It's called the super account, and it's super parentheses mortgage account wars, where primarily Santander tried to incentivize changing its market share by offering terms including much more attractive interest rates to attract people, and that didn't happen. And it's something that again happens in Germany, that trying to grow organically takes a lot of time in the retail market, takes a lot of time and a lot of effort. It's something that we could revisit when we see how successful these fintech challenger banks are. Yeah. But the bigger issues about modernity, then let's have a chat next week or when you're free. Whatever.
No, I think at that point there are some comments and so on that we've not been able to address, but I think at that point we do need to close. It's been a wonderful afternoon. Thank you to everybody. Next month's meeting, third Thursday in May, will be our chairman, Doran Swade, talking to us about the history of computing. So thank you for attending this afternoon, and look forward to seeing you next month. Thank you very much indeed.
Thank you, Roger and Doran, for having me. Thank you, everybody, for staying in this.
Thank you.
Thank you.